Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we have a lot to cover today. We have economic news that came out yesterday that we have to go over one more time. We talked about ADP coming in far lighter than expected. Again, ADP private sector jobs coming in at 37,000 yesterday. Now, this morning we got jobless claims. Jobless claims, which are people filing for unemployment, continue to go higher this week, coming in at 247,000 filings for unemployment. Last week was 239, so there's an uptick there. In addition, if you go to the prior multiple weeks, it was all around 220. So we were at 220 for a long period of time, sideways in terms of filing for unemployment. Now we spiked to 239, and this week 247. So listen, 247,000 historically is not big. It's not a huge number until you get to about 300,000, but it's the trend change that I'm watching here. And that's something that I have to say is important to keep an eye on. In addition, yesterday at 10 a.m., we got the services PMI data, and that showed contraction in the services industry. Now, listen, we know manufacturing's tricky because we do so much manufacturing here in the U.S. overseas. But again, to see the services, which is something the U.S. is primed into, to see that contraction there, that does get my attention. And remember what I told you guys over the last 3 weeks or so. I said, listen, ignore the trade headlines. When you see someone like, if Trump is ripping the Fed or ripping the China, the markets are ignoring that because the economic data has stayed relatively muted and strong. But once we see an uptick in the negatives on the economic side, or in this case, contraction, that's where the markets are going to pay attention to. All right, so this morning we saw jobless claims. Let's flip into those charts, and I want to show you this here. So initially, jobless claims dropped the markets, and then we heard from the ECB. They cut rates 25 basis points, and we saw an uptick. In addition, because of the jobless claims spiking up and the yesterday ADP number, the markets are now pricing in a rate cut much, much sooner from the Federal Reserve. And the markets are responding. Look at this. The market's popping initially on all of a sudden the expectation that the Fed will be cutting rates as early as September. All right. So again, last week, I think Morgan Stanley came out and said, hey, the Fed is going to have to cut rates a lot more than anyone anticipates. The markets are starting to get used to that. All right, so I want to show you something here, folks. So what we're going to do is I'm going to flip over to our homepage here. Bear with me as I share that screen, but I want to show you the Fed Watch tool here. This is something that, again, we go over quite a bit. So let's bring this up to the forefront, and you guys can see me on the screen there. But basically, if we look at this here and we flip over, bear with me, we flip just to the screen. What we can see here very clearly, if we go down to the bottom of our homepage, and don't forget, guys, there are literally tons of value, and everything on this homepage, by the way, is free. Right? So you have your financial news over here. You have the traders alpha action where I talk about jobless claims coming in at 247,000. Then you scroll down here and look at this, guys. Treasury yields. This is put out. So I did these this weekend. I do these deep dive research projects each weekend. Treasury yields just broke down. And this was just last week that we saw this drop. And this week yields are going lower, right? So again, all this alpha action right here, Bitcoin analysis, Ethereum analysis. We have key stats up here as well. Look at all the interesting stats here. Commodity charts right here. Again, very cool in terms of this. I mean, just look at this chart. Right here, I talked about gold's bullish wedge, why central banks are loading up while politicians keep spending, but essentially highlighting this bullish wedge. And we know gold is ripping, right? Gold again broke out this week and is going higher. So my point being, anyways, guys, use this to your advantage. There's so much information, including the heat maps, the fear and greed. But this is the key here. Every day we update this. And if we flip to the Fed Watch tool right here, we can now see that, look at this right here. Right here, September is now favored for a rate cut. That's the first time we have seen a Fed rate cut expected by the markets in September. And that is due to the weaker data that we are seeing over the last couple of days, ADP, the services PMI, and now the jobless claims data. And the markets initially popping sharply on that, as we saw, but then ultimately, again, coming back in as, again, the question you have to ask yourself, Is weaker economic data really good longer term? Sure, cheap money is great. Everyone loves their cheap money, right? It's been what's driven the markets, honestly, since 2009. But the bigger question is that overall a good thing? And I think that's the bigger question that we're all kind of facing at this point as we continue through. All right, going back to the charts here, let's take a look. Again, you could see the big pop once the market was like, holy cow, the Fed is going to be cutting in September most likely. And then look at how we come right back in. We came right back in as people are now, smart investors are saying, wait a minute. A recession means lower earnings for everyone. That might not be so good. We're still net positive on the day, but off of the highs. Now, listen, lower rates. What does lower rates mean, guys? At least for small caps. Lower rates for small caps is a lifeline. All right. With rates where they've been, small caps have underperformed the S&P and the NASDAQ tremendously. But there might be a pattern on the Russell 2000 that is signaling major upside, and that could be because rates are set to fall. And let's take a look. So flipping back to the chart, look at the Russell 2000. Do you guys see the pattern on this chart? Test yourself right now. What type of pattern is this? I posted this on our financial news this morning, but take a look right here. Beautiful inverse head and shoulders pattern that's borderline breakout. Now, again, we'll watch and see what happens here. But if we break this neckline, what we can do is we can do a measured move from the low of the head straight up to the neckline. And you take that distance and it can give you our target. And look at that, folks. Our potential target on the Russell would be significantly higher. Now, listen, there's no guarantees that the target measured move plays out. But the point being is this historically is a great bullish pattern. And that is what we are seeing in the charts as we speak. All right. So again, it hasn't broken out yet. It needs to close above this neckline at around 209.50 on the IWM. But this is something that is getting my attention dramatically here for a potential big move up. And again, the thought process is, well, what would trigger this? Well, lower yields. So if you look at the valuations, now normally small caps, because they have the potential to grow a lot, are usually valued at a much higher, PE ratio. But believe it or not, they're actually trading at a lower PE than big cap tech and many of the other big caps out there because rates have been so high. So remember, if you're a big cap tech like NVIDIA, do you really have to borrow money? No. You're printing money. I mean, they are printing money. So it's the small caps that have been kept down because yields have been high. But if yields start to break down, now we're talking about maybe, at least in the short term. Listen, if we get in a recession, small caps are going to hurt as well. I mean, everything's going down. But at least in the near term, if you're like me and you're looking at shorter term trend trades or breakouts, the IWM looks very, very interesting. So keep an eye on that. And just flipping over to the 10-year yield here, I just want to check in on that. And we can see, look at that breakdown. Remember the chart I showed you that was on the homepage of Verified Investing? It was right here. We had two inside bars right along the line. And then look at the breakdown in yields occurring. So very cool to see. I love when those homepage charts play out so beautifully. It is really, really cool to see. All right, let's talk about some stocks here. MongoDB having a monster move here. MongoDB, look at this, almost up, basically up 20%. Now, before I give you guys the trading level, I've got to show you one more thing, right? So focus back here, right? So I'm going to share the homepage again because this is some of the coolest stuff. And I want to reinforce this, guys, because my team and I, we put out a lot of free quality content. And the idea is that it's a way for you guys to test us out without subscribing to some of our services, right? It's like, okay, well, if they can't put out free content that's good quality, well, then they're probably not good in the services. So when I put this out and what we put out like top quality research, and it's all technical analysis based, right? And the idea again is, and let's focus in on this, but here we are, right? Here's your homepage again. So you see the financial news over here, right? So what I want you guys to do is click right here, or you don't have to. I'll show it to you on the screen. This brings us to all of our financial news. Now, our financial news is named financial news, but really it's technical analysis news. And by the way, the Russell chart right there. But go back to yesterday morning. Scroll all the way back. Yesterday morning, all right? So here, if we go back here, bear with me. Okay, we're still going. Look at all this quality right here. Okay, so this was an article I wrote at around 8 in the morning yesterday. Now, remember, MongoDB did not report earnings till yesterday after hours. So this article, and we'll bring it up here, the title MongoDB's Perfect Storm Setup, Inverse Head and Shoulders Pattern Eyes 265 target as earnings loom. And basically, look at this. Look at the chart I included in this. Check this out, guys. Shoulder, head, shoulder. And what I said in the article, and you guys can go check on this and everything, but I basically was saying that, hey, guys, be aware that going into earnings, this is an incredibly bullish chart, and it likely will have a big move up on earnings. Well, guess what? This was when the stock was trading at 190, what was it? 193.75. The stock today is at $238. I mean, again, free in the financial news for everyone to see. All right. And again, I just stress that because I'm a big fan of, listen, there are people out there that can't afford our services, right? So again, I totally get that. And I totally understand. I'm a big believer that even when I teach you something in technical analysis, don't trust me. Don't believe me. Go prove it to yourself 10 times, 50 times, 100 times before you believe it, right? I'm a big fan of saying, listen, you hear something online, I don't believe anything I hear online until I do my own research. And I think a lot of us are now becoming more like that, right? Where there's so much. I mean, there's deep fake videos now. I mean, literally, you don't know what's true and what's not until you do hardcore analysis and research. And I want you guys to have that same viewpoint, even with stuff I do. Don't go blindly and trust what I say. No, don't. You should research it, make it prove itself to you. And that's why I put out some of this stuff so you guys can see, oh, he said inverse head and shoulders going into earnings. Holy cow, MongoDB is having a huge move on earnings. And there's that pattern formation. And then, of course, we just talked about previously. And let's go back to the MongoDB chart. So just to go back to it here, here's the chart again on MongoDB. This is what I had shown in the article. Classic inverse head and shoulders. Yesterday, it broke on the neckline, and then here it is trading up here. Very cool stuff. Now, in terms of trading setups, where are we looking to trade this? There will be some resistance around 240 right here. So, again, it's very close to that first resistance point right here at this pivot low. But really what you're going to look for, the bigger level, is going to be right in here to gap fill. This zone right up here. This, I don't think it hits today. This would be more day tradable, maybe a swing trade for a few days short on this. This would be my short level I'll be eyeing today, maybe at the open with the live day trading room. All right, so pretty cool stuff there. And again, some great examples of different charts that are free, that I've done the research, that my team does the research on, that are playing out in spades. Another chart that's playing out in spades, guys, silver. Silver continuing to rip today. What a move on silver. Palladium was another good call here. Obviously, we've talked about gold. We'll get into those charts in just a second. But again, let's finish up with stocks before we get into Bitcoin and the commodity sector. F5 below here, up on earnings. So they had a good earnings release there. The stock kind of was, if you look at the bigger picture, it had a big move up. But look at where it's coming up to. There's a gap fill here at 133. And then what I'm looking today at 140. If this gets to 140, look at this level right in here. In fact, I'll put a trend line right here. All right, so right across there, a pierce of 140. You can see it, this low pivot here. Sorry, right there. Pivot low, and pivot high. That tells me there's a level. Now, you might say, what about the gap fill? Well, the gap fill's okay, but the problem is, look at this. It was already piercing the gap fill right here. And so pre-market, it's already pulled back. So essentially what I'm saying is the trade has already played out pre-market of shorting the gap fill right here. And you can see it even went to 135. So it actually went as high as here pre-market and then is pulled back here. So it's already pulled back. So I don't like to take levels that have already hit when there's volume pre-market and there's already volume on this. But this one has not hit at a pierce of 140. So I'm going to keep that on my radar. PVH down sharply on earnings. This, again, they basically said that most of the stuff that they make comes from overseas. So it's going to be tariffed. So that's going to impact their earnings. And if we look at the chart here, you can see where it's trading in the pre-market. My first level of interest, look at this beauty right here. This will be right here, 67 pierce. See this right here. If I zoom in, pivot low, pivot low, pivot low. So I'm not reinventing the wheel here like I always say to you guys. All I'm doing is saying, okay, well, if it hit here and bounced, and it hit here and bounced, and it hit here and bounced, and then it went on this long trek, in general, I can surmise that if it hits here, it should give me some sort of day tradable bounce. Now, would I swing trade that? Heck no. It's just not a big enough sell-off yet, but maybe a double bottom down here. But ultimately for a day trade right in there. AVGO reports earnings, guys. This stock is up again today. It almost put in a topping tail. This is an extremely extended chart that made a new all-time high yesterday, so keep an eye on that. In terms of a level, I mean, this is tough, guys, because it's in uncharted territory. In terms of a level here, I don't know. I mean, this again is very, very tricky. I mean, maybe if it has a monster move up, well, actually, it wouldn't be that big of a move. It'd be about 10%, but this is a $1.2 trillion company. But if it were to spike up on earnings to this 295 area right up here, there's a pretty solid trend line that goes all the way back to the 2023 high pivot right there. So maybe there, to be honest, it's really, really, really overbought. I mean, look at the run this thing has had. In general, it's factoring in amazing earnings. So they're going to have to come out with amazing, like even better than amazing. Basically, they're going to have to cure cancer for it to continue to really rip higher. Maybe they can do it. Who knows? We'll find out. But I guess my point being is that for technical purposes, I'm having a hard time finding a level, even though if I had to take a trade on this going into earnings, I would be short. But again, technically speaking, there's not much up here because we're in uncharted territory. It's essentially what you call in technical analysis price discovery. All right. Bitcoin is holding steady. It's still bear flagging here at this point, so let's keep an eye on that. Needless to say, if we see the stock market continue to rally, then that could continue to lead the Bitcoin chart back up. But right now, overall, this is a bearish channel pattern formation that's still holding technical support right here. But again, the bearishness makes me think that probability, if it continues to go like this and doesn't pop up soon, it likely will fall to the wayside. Gold today, let's take a look at gold. Gold was up more. It's coming back in a little bit. So we can see again, it's still up. But this was that homepage chart that was right here. So literally we were trading right here when I posted it over the weekend. And then you could see, boom, breakout, consolidation. We'll see if it confirms the breakout, but it's making another bullish pattern. Look at silver, guys. Silver is just rocking here. This is awesome. I'm still holding a long SLV position with smart money commodity members. So that's awesome there. That again, we are deep in the money on that. And then remember, my favorite was palladium. We had a classic breakout and then a retrace to the scene of the crime. So look, broke out. And then remember that in general, charts like to revisit their home. So home base is this resistance. It broke out. It went away from home. It went to college or school or university. Then it comes back home for, dinner one night. And then it says, okay, thanks, mom and dad. And it goes on its merry way, right? And that's what you get right there. This is one of my favorite technical setups in trading. In this chart here. And this, by the way, this happens all the time. The retrace to the scene of the crime. It really does happen quite a bit. Oil today, taking a look, oil is upticking. It's slowly getting close to its scene of the crime, which would be up here. And again, I'm going to be watching for a potential short there. And the natural gas here, folks, nat gas is inching up a little bit. But as I discussed yesterday, it's got resistance here and then support right here. But listen, when all is said and done, guys, very cool stuff. So again, we saw jobless claims higher. Remember, that's people filing for unemployment, so higher numbers are not good there. It's not at recession levels yet. It has to get north of 300 for that, but it's the uptick on a weekly basis that's catching my eye. That's something to behold. We had obviously ADP weaker yesterday. We had the services PMI weaker, contracting yesterday. Now, listen. The markets are going to focus on non-farm payrolls tomorrow. I will go over it in the game plan and analyze it, but that is going to be a very important data point tomorrow. Do we see a weaker than expected number on non-farm payrolls? What does the unemployment rate do? These are all things to behold and watch. But ultimately, a power-packed educational piece today here in the game plan with some good trading levels. You guys are awesome. As always, I thank you guys forever and ever for supporting Verified Investing and our technical analysis approach, leaving all the hype and nonsense on the wayside. All about charts right here, all about probabilities so that we don't get caught up in all the crap on social media and in mainstream media. But you guys, as always, I thank you from the bottom of my heart for spending time with me every single day here. I will talk to you soon. You guys take care.